here watching the chat. Thank you all for being very funny, very calm. We have veterans in the audience, and I wish I could sit back and read all your comments and reply to them. Mike, stiff drink coming your way. And as I can't remember, somebody said earlier that things were really boring in the market. And I thought so too this morning. I put together a slide, which I'll show you in a little while, as to why I thought it was boring. But thank you all for being here. Let's jump in. And again, we are veterans. This is a chance to stack. Things are ugly, and we're going to be out of this soon. That's for sure. We just don't know when. This could be the last big dip down before, obviously, things happen on the macro front. But the macro is still very ugly. So let's jump in. Not waste any more time now that you can hear me. What a good feeling. First of all, edutainment. You guys know the drill. Second of all, Bitcoin dump. Bitcoin suddenly crashes, lowest level since early July. That is a long time ago. It shot down to 17.6. How much lower can it go? This is a question on all of your minds. And it was tempting to buy today, but it was more tempting to buy other stuff too. So let's go a little bit further. Anemic Bitcoin results in volatility. That's what I thought this morning, as you guys did in the audience. So the bout of volatility comes after the leading cryptocurrency got stuck in its narrowest trading range in 2 years. And it was like super tight, 5.4% up and down, really tight range. What that looks like is this. And you guys know the first kind of range bound section. Then we crashed through it. And then we had that little tiny section. This is what I built literally 3 hours ago. And you can see that other little kind of funnel in the bottom right hand corner. And it says Monday to Thursday, etc. But let's zoom in on that, because we did crash out of the ascending channel wedge, and now we are down here. This is what that tiny little piece looks like. And I was like, something is got to give. And I wrote this, did not change it. Zooming in, a move is imminent, either up or down. I was not sure where. And if you look at the very quiet week we had, again, that very tight range compressing, that always means something's going to pop, either down or up. And Bitcoin found support at 19.5, which was a very important level, and that broke a few hours ago. I like it about an hour and a half, 2 hours ago. Now, if Bitcoin falls below 19K, which is exactly where it is right now, it's about 18,850. A level, that 19K level is held through July. And the further we go down from here, there is no clear support down to the 17.6 level, which is where we hit during the 3 hours capital capitulation. Now, towards the upside, Bitcoin still has that resistance level at 20,500 and 22,000, and then 24,500, 25,000. That's kind of what we look like. These are the local tops. But again, it looks like it's running out of steam. Nobody is stepping in and buying, and the alts are on fire. Obviously, Bitcoin is kind of stuck, I think, behind the shadow of Ethereum right now, and that makes it prime for manipulation to happen. Now, the dump that happened, I don't know if it was a Mt. Gox dump. I checked all the wallets. I didn't see any action there, so it's probably not that. But remember, all eyes are on that 17.6. A lot of people are waiting for that to revisit. Putting in the double bottom, we are 6.5% away from that level right now, or 6%. Rough calculation, yeah, 6.5%. It is not far to go to get there. And if we did, I know there's a lot of buy walls at that level, buy walls at 18K. We'll see. But I think that would be good to one final flush out before we move up. Now, liquidations over the past 12 hours were kind of ugly. We had the third highest set of liquidation pretty much since July. And that was kind of scary. So a lot of people got hurt. They weren't expecting us to fall below 19,500. So it's another kick in the teeth, as they say. But again, it's a volatile beast. The macro is ugly. We'll talk a bit about the real ugly towards the end as the stuff that's going on that is really bad, but stuff I've spoken about over the last week and a half on this channel as well. And it has to do with macro and energy and all crazy stuff that's happening. So let's start with the good news. Believe it or not, despite the dump, there is good news out there, okay? Now, sometimes it's really hard for people to not get jaded, not get hurt. You know, things like Bitcoin and the markets can do that to you. They can smash your confidence, smash your mind in where you just want to throw in the towel and give up. But this is the time where the smart money doesn't do that. Remember, you buy when others are fearful. So first of all, let's talk about cycles. A big thank you to JD757 for putting this up on TradingView as for all of you to see. And it kind of speaks to where we are today. And when you look at this chart, it's very clear that, yes, a Pico bottom is in. So he looks at things like RSI and MACD and stuff like that. I can hardly see it with my eyes right now. RSI and stochastic RSI, if I recall. And we look at the 2015, the 2018, and where we are today, 2022. Now, the big thing to take away from this is on the next slide. I bastardized it a little bit. So the first cycle was 3 years. And in that 3-year period, from the so-called bottom to the top, it took 1,065 days, and Bitcoin went up 120x. I know 120x not going to happen again, so just sharing with you some history. The second period, it only took 2 years to get to the top, and it did a 17x in 759 days. But the reason I want to share this chart with you is this is, a time to layer into crypto. It doesn't have to be Bitcoin. It can be anything you want. Do your research. Never trade blindly, as they say. But here, trade with no emotions, trade with facts. This is considered a good opportunity per our colleague JD here. And the best opportunity is when RSI and stochastic RSI are in the orange box below. Very hard to see in the bottom right-hand corner, but he has the orange box all the way below. And we are there right now for the third time in history. So that was the first thing I just wanted to share with you all. Again, this is on-chain technical analysis. Another piece on-chain here from Glassnode. You can see HODLers are back to filling their bags to the level that they were at in November 2020. So if you look at this chart, there's the pink zone on the left, from the pink dot to the left. You can see that's from November 2020 to May 2021. We saw cumulative outflow of about 400,000 Bitcoin in a few short months. And the hodlers aggressively spent coins and took profits. Lesson learned, everybody, all the way up to May, June 2021. Now, after that, though, phase 2, from May 2021 to the present, there has been an accumulation period and an inflow of exactly 400,000 Bitcoin can be observed. They effectively replenished the previous distribution phase. So these are the hodlers. These are the people that hold about 155 days plus, and that's what they've done. So that is a positive sign. Let's dig a little bit deeper and find out where the money is flowing right now. This is per James Butterfield. This is the digital asset investment product money flow. And you can see, despite the dump just now, we did see Bitcoin digital asset investment inflows of about 9.2 million over the last week, although a big chunk of it was into short Bitcoin. So somebody knew something was up. Now, Bitcoin saw outflows, tiny outflows, about 10 million, representing the fourth consecutive week of Bitcoin outflows, totaling, though, only $70 million, which is not a lot of money for an asset that size. Let's look at the different select assets. Again, follow the money. You can see here the minus 11 for Bitcoin, minus 2 for Ethereum, despite the merge coming up. Although Ethereum was very strong over the last couple of days. Short Bitcoin, 18 million. That's a signal right there. Somebody knew something was going to happen. Solana, 500,000. And XRP, 200,000. Cardano, 100,000. So Solana is still chewing up a lot of this big money flow while everything else goes down. Let's talk a little bit about this. We're going to switch gears and talk about oil. Why do we talk about oil? It's because oil is a leading indicator for inflation, where inflation is going. Now, and oil, obviously, on the chart here, you see the $100 level. The red line is the 50-day moving average. The green is the 200-day moving average. And lo and behold, we are now bouncing at this $86 level. But look what I did to the chart. We have a death cross for oil. And the last time we had a death cross for oil, apart from just a day ago, we had that back in March 2020. And we all know what happened then. Oil went to zero. I'm not saying it's going to go to zero again, but death crosses can be pretty ominous right now, and oil paints one, and that paints a very good picture for inflation coming down, which is a good picture for the Fed to look at things like unemployment's rising, inflation is getting under control, slowly but surely. Again, positive stuff. That's why we share that in the good news area. Now, CPI print, speaking of inflation, here, we have the market being very concerned now because just about, 5 trading days from now, we have the CPI print coming out on the 13th of September, and the market is concerned. This is the chart of where we were. We hit the top of 9.1, fell down to 8.5. I do believe it's going to come down again in the next print on September 13th. Hopefully it'll be something under 8. That would be very, very positive. Again, all the signs are there. We are beyond peak inflation. No ifs, ands, or buts. Now let's look at this. Let's look at the trueflation. What's interesting here is the trueflation, which is a true indication of inflation, hit 12% on March 11th, 2022. Since then, we've come all the way down, and we're running about 8.5%, 8.6% right now. So you can see peak inflation per trueflation, which is a true indication of true inflation, peaked in March, and it's been coming down ever since. So I do believe we will get a good print, hopefully, again, under that 8 number as we go forward. So let's look at the crypto market. Again, layer ones are doing very well. If you look here, everything compared to Bitcoin, ETH dark green, Solana dark green, Avalanche recovering from the bad news they had last week, and Near Protocol dark green. We have also, what's that at the bottom? I can't really see, but there's another dark green one down there. I can't quite read it, but that shows you that the L1s are in the sun and the market's really, really positive. We'll talk a bit about altcoin season in a minute. But one of the things I do want to stress, and one of the reasons I'm fascinated with the L1s is this. Dan Held, he was on a podcast with Raoul Pal, and he pointed out something that I knew, but I didn't know the exact numbers, and I thought they were worthwhile sharing here with you all. So he spoke about DeFi versus TradFi, has 0.4% of the market cap. So all of DeFi is worth $8 billion only. All of TradFi, which is legacy financial institution, banks, stock market exchanges, etc., is worth $2 trillion. Okay, this is why I love DeFi. They're my words, not Dan Hell's numbers. But he spoke about it being a very asymmetric bet. We've been through hell and back. And guess what stood up? DeFi. It didn't crack at all. So that is a big, big, big thumbs up for DeFi. Why I think it's definitely worth an investment. Why I look at layer ones. And also, if you follow the money, all the big investments are going into things like infrastructure, layer ones, and of course, DeFi plays. Because that is where the market's going to be 5 years from now. So you want to play for that area. So second, the last piece of good news, which may be bad news for some, may be good news for others, but I call it death to the cubicle. So this article here was in the Wall Street Journal, or Barron's, I can't remember. The boss may not like it, but millions of workers aren't coming back to the office. And what's interesting about this is, when you think about it, everybody loves remote work. Nobody likes to sit in a car for 2 hours a day, but many bosses are pushing for people to return to the office, citing better teamwork, productivity, innovation, all that type of stuff. And yeah, if you need to collaborate on products, you need to sit side by side. But most people who are ICs, individual contributors, I don't believe they need to be in office, especially if they have a self-drive, self-discipline, high degree of self-discipline, high degree of responsibility, self-motivation, whatever you want to call it. As long as they have that, they should be allowed to work from home and not have to sit in traffic, risk themselves in car crashes, be late for pickups from school and everything else. It can all be very, very stressful, and we've all lived that. So I'm excited to see what happens. But if you are in one of those situations, what I do advise is prove to your boss that you are able to motivate yourself and you are far more productive at home, and maybe you don't have to go back to the office. But a lot of people like that kind of control era. So I think it's miserable. Everybody I know who ever worked in a cubicle, they didn't like it. So fingers crossed, everybody, make your case. Make your case that you are a self-motivated individual and you don't need somebody standing over you cracking the whip. Okay, now to the bad news, everybody. So we talk about Dixie every week for months and months and months. Dixie broke 110, which was the dreaded level. And I tweeted about this morning. Breaking 110 barrier. Obviously, the yen is in the gutter. The British pound had a slight pump on the Truss Prime Minister news. The euro is under parity again, super weak. So the benchmark products are not looking good because all the other fiats are garbage. So it's kind of the dollar is the least worst, and that's why it's so strong. And that's why this is bad news. Strong Dixie means weak crypto. And it was like a beautiful, beautiful indicator as to what happened a few hours ago. Let's look at altcoin season. It is smoking hot. It's back up at 96%. Nothing is killing these alts. And, what are you going to do from here? Obviously, with all the stuff that's happening with Ethereum, Nobody wants to buy Bitcoin. Everybody's into the layer ones, etc. And for good reason. Now let's look at Bitcoin dominance. Here you can see it's at an all-time low. Stunning. I talked about my floor being kind of 39%. We are below, are right at it. We're, I think, 39.2%. This morning, last time I looked. This is the lowest level since January 22, when Ethereum went on a rampage. And previous to that, it only hit this level one time more before, and that was in January 2018. Notice the Januaries. January 2022, January 2018, and here we are again today. So something's got to give, or maybe just the layer ones are just decoupling from Bitcoin altogether and doing their own thing and really getting the requisite value that they need. So let's talk about ETH Bitcoin pair, year-to-date high. I did talk about this yesterday in yesterday's video, and I said it was going to blast 2.08 level. It did, and it's up over 4 or 5% in 24 hours, despite the weakness in the overall market. Again, this pair is just on fire and looks like it'll be strong, again, as I mentioned, for the next week to 10 days as we go forward. Let's look at fear and greed. We are back in extreme fear, ladies and gentlemen, which is very sad. We're down at 22. Obviously, under 25 is the extreme fear level. So that is not good. But it looks like it may be bottoming around a little bit. But I'd imagine it's probably going to be even more fearful after today. A lot of people got wicked out, got liquidated, as we showed at the beginning. So let's look at the stock market. What's going on there? Ooh, stock market's also getting hit. Red all across the board, with the exception of Visa, GreenSpot, MasterCard, and in the middle, you see the drug companies. We all know why they're doing very well. Won't talk about that. And Tesla, big green spot as well, up 1.5% despite a cruddy market. Assets that are debt-free with high growth. They don't care about interest rates. They don't care about recessions when they're using an 8-month waiting list for a vehicle. So again, good stuff to be in, and very happy on days like today to have a little bit of Tesla. Let's talk about who's stacking and who's dumping. A lot of stuff to cover today. Sorry for jumping all around, but I had to organize the stuff and stratify them by good, bad, and ugly. This is the Bitcoin accumulation trend score by wallet cohort, again from Glassnode, and you can see the aggressive whale distribution in response to price relief. And that means once we got above that realized price, we're above the 23,800, the whales, the 10,000 plus wallets started dumping their Bitcoin. But let's dig into exactly what's happening, because there is an interesting thing that is different from before. So all summer, let's start with the middle cohorts. The 1 to 100 cohort, first of all, they started buying, which is good. That's the blue. Same with the 1 to 10. They started buying a little bit later after the 10 to 100. But above that, you can see the guys, the 100 to 10,000 cohorts, they've been dumping since July. But now they're beginning to go yellow, which means they're beginning to buy again. And look at the 10,000 plus whales, they are dumping. So it's everything's kind of turned on its head. And the shrimp have just been buying, but their buying has slowed down. I think they ran out of cash. Right now, the shrimp, they are less than 1 Bitcoin because they're kind of light blue. They're not selling, but they're not buying as aggressively as they were during the summer months. So that's an interesting view of exactly what's going on across all the different cohorts. And it's very nice to see the middle cohorts starting to accumulate again, just flipping. And the big whales dumping, because I was concerned for a long time about that middle cohort, the 100 to 10,000 level were not accumulating at all during the summer, but now they are. Now, a little bit of ugly news to be fair and balanced. First of all, we're going to start with the miners, the Bitcoin miners. Their financial condition is deteriorating. The chart here shows a comparison between 8 different public miners and their quick ratios, which is a ratio we look at a lot. And this is from Arcane Research between spring and now, basically from March to today. And we can see that for 6 of the 8 companies, the quick ratios have declined. And it has declined the most for Marathon. I did highlight Marathon in my last miners review, saying they are the most at risk from a financial balance sheet perspective. And it looks like here we go, right on clockwork. So it does make sense to dig into the financials on occasion if you are invested in those assets. And you can see these companies are struggling with weak cash flow. Now, the most of these companies are still in okay financial condition. One is deeply struggling. That's Stronghold Financial on the bottom right-hand corner. And of course, Marathon could have some issues. But remember, they might be able to be saved by the knight in shining armor. But that knight in shining armor would be a rebound in Bitcoin price for that to happen. So in addition as well, CleanSpark and Riot have improved their ratios. So they've done good things to their balance sheet, which is positive. So it's not all negative. Two really bad, two good. The rest deteriorating. So let's talk about, again, this is the other piece of the big gray cloud hanging over the markets. Boom goes the petrodollar hegemony. Again, if you've watched this channel, if you're subscribed, you would have heard me talk about this a lot, and people wonder why we talk about it. Well, it's very important for the markets to know exactly what's going on. So China agrees to pay for Russian gas in rubles and yuan per Gazprom, and they were pushing for this for a long time. Russia wants to wean not only itself off reliance of the dollar and the euro, but all currencies, and they want them to use their own currencies and their partners' currencies, those friendly countries that they have. In addition, they shut off the gas flow to Europe, to Germany. This is from Nord Stream. Nord Stream 1 has been stopped, and they promised they will not open these pipes again until sanctions are lifted. What a surprise. But guess what? Remember only a few days ago, they said, oh, the pipe is closed because of technical difficulties. Technical difficulties, my butt. It was all a master plan from this guy. And he has Europe over a barrel going into winter. He wants those sanctions lifted, and he wants the reliance on the euro and the dollar to go away and strengthen his own currency. These are the macro games at play, and it is scary and interesting to watch all at the same time. That is today's Octa. Hope you enjoyed the KPM. Let's check out the markets, because since I've been here with you, I haven't actually looked at them, so I'm a little bit anxious. Yeah, I see one thing that's really good, because, yeah, Bitcoin's kind of flat, but the other ones are kind of rebounding nicely. Some of the layer ones too. So thank you all for being here. Hope you enjoy the show. Subscribe if you haven't. I know it's a dark time, but those people that are in the market now, especially the newcomers, what a time to join. Those that have just been through a nasty storm for the last 12 to 16 weeks, if you're still alive, you've made it to the other side. Remember, we are at bumping along the bottom. It could get 6% worse or whatever, but the upside is there, and it's only a matter of time before things pop. But it's important. Again, if I stress one thing, is layer in, be on the train. Have you some of your positions already deployed, so when things do rebound, you don't miss the boat. Okay, so that's what I'm doing anyway. Thanks all. Not financial advice, of course. See you all tomorrow.